So if 5 years is 40, what would a 20-year CDS equivalent? They don't trade at 20 years, but let's put out a 20-year number. 20 times 8 per year gives you 160 basis points. Now, the total funded and unfunded liabilities of the United States of America is approaching 200 trillion US dollars. You take 160 times 200 trillion, and you get, I'm doing it in my head, $3.2 trillion would be the implied insurance value on the United States. $3.2 trillion just on the United States. What is Bitcoin trading for?
Popular Bitcoin strategist and executive director at Validus Power Corporation, Greg Foss, believes the intrinsic value of the leading crypto asset can be calculated using sovereign credit default swaps. According to Foss, who has decades of experience managing risk, an analysis of the creditworthiness of the United States is enough conviction that Bitcoin is incredibly cheap at its current price. Foss, who consistently describes Bitcoin as the best asymmetric asset he has seen after over 35 years of trading the markets, believes the cryptocurrency is the perfect insurance on the failure of a basket of fiat currencies and sovereign debt. This is a notion Foss has shared over the years. In October 2021, he published an article in the Bitcoin magazine where he stated that Bitcoin is insurance on the decaying credit quality of fiat-issuing sovereign nations. As a result, Foss believes the crypto asset's value can be calculated just by analyzing the creditworthiness of countries. Using an example of the United States, Foss noted that a CDS contract for a 20-year term at the rate of 100 basis points would be worth $1.9 trillion. But that was when the country's debt were closing in on $190 trillion. Now the total liabilities of the United States are over $200 trillion, with about $32 trillion in funded debt that appears on the balance sheet and about 170 unfunded future debts owed through Medicare, Medicaid, and Social Security. According to Foss, the same 20-year term CDS contract has now been bumped from $1.9 trillion to $3.2 trillion. When compared to the current overall Bitcoin market cap of $563 billion, it reveals just how cheap the crypto asset is. And that's just for the United States. Though viewing Bitcoin as credit default swap insurance for the United States and other countries is still a very unpopular idea, Foss insists that the leading crypto asset is the ultimate anti-fiat Ponzi. The idea might not be catching on now, but he believes it would when all fiat currencies, including the US dollar, inevitably collapse to zero. To crown it all, Greg adds Bitcoin has no counterparty risk, and it is far above other assets, including gold. Before we listen to Foss' detailed and insightful analysis of Bitcoin's intrinsic value, please consider giving this video a thumbs up, subscribe to the channel, and turn on post notifications for more videos like this. Also, ensure you drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm, so we can continue to bring you these videos. Thanks and enjoy the video.
So having been a credit CDS trader and a distressed debt trader my whole life, what is credit? What is the credit default swap? It's basically an insurance policy on the default of any counterparty. It started, and in my case, it was on distressed debt, not distressed debt, but junk debt or lower quality debt. But it goes all the way up the credit quality spectrum, all the way to sovereign debt, which is typically the highest rated credits within any country. So, the S&P and Moody's will have a cap on the ability of a company to be rated higher than the sovereigns. Then one day there was a time when the drug companies in the US were rated higher than the credit quality of the USA. But at the end of the day, understand what happens. You have various tranches of credit risk as measured by the credit rating agencies, subjective credit rating agencies. Here's the truth. If the USA could not print money to solve their debt burden, they'd be the equivalent of a CCC rated corporation, because the USA does not even cover its interest expense one turn from its EBITDA, if you will, or free cash flow. Why? Because the USA has entitlement spending and it has military spending, and the residual is not enough to pay for the interest expense. So the USA is a zombie borrower, but it can print money. If people embrace the thesis that Bitcoin could be viewed as credit default swap insurance on USA and all other countries, Well, it's trading about 1/7 of its value just for the USA. And here's the really cool thing. There's no counterparty risk. Bitcoin is not an insurance company. When you hold it in self-custody, you don't have to worry about buying this insurance from an insurance company like Bear Stearns. See, when I was trading credit default swaps, I had an exposure to Bear Stearns that meant I thought I was going to have insurance from Bear Stearns. And guess what? When Bear Stearns looked like it was going to fail, I had to run out and buy insurance on my insurance company. You see how this whole circular thing works? Bitcoin is so beautiful because there's no counterparty. So there's a way to value it, and there's a way to appreciate that it has no counterparty risk. And then you could say to me, well, Greg, isn't the same thing said about gold? And I'd go, yes and no, because gold has no fixed supply. It's not transferable or portable like Bitcoin is. And most importantly, it's not auditable. There is no blockchain to audit it. And I still like gold, don't get me wrong. But at the end of the day, Bitcoin is so superior as not only a technology, but also as an auditable asset. That is why I love Bitcoin, as effectively, in my view, from a credit trader's perspective, my whole life, it is the most beautiful insurance policy on the failure of fiats globally.
Greg Foss is not the only one talking about the link between Bitcoin and sovereign credit default swaps. Last month, American investor and chief executive officer of Galaxy Investment Partners, Mike Novogratz, tweeted about the concept. His tweet reads, "Bitcoin is also sovereign CDS. Think about it." Of course, many of the replies to the tweet note that Foss has been touting the concept for years. During the interview with Kitco News, the Canadian Bitcoin advocate explains that the notion is catching on and it's already very popular with credit guys. As the fiat Ponzi crumbles further and more people realize the importance of Bitcoin, Foss believes that more people will see how incredibly cheap Bitcoin is compared to its amazing qualities. Let's get back to the interview as Foss further discusses the opportunity Bitcoin presents for all investors that have come aboard.
If the thesis is leaking out, it will, be spread by bigger money risk managers who tend to look at it from a credit lens. And I will tell you, another guy that I have enormous respect for at Golden Tree, Tannenbaum, Steve Tannenbaum, he loves Bitcoin for a similar reason. And all I'll tell you is it resonates with the credit guys more quickly than it resonates with, firstly, equity guys who, in my view, are not always the sharpest tools in the shed. And then the run-of-the-mill, mom and pop. It takes a long time to permeate the entire spectrum, Michelle. So yes, everything has subjective value, but I'll just tell you, for guys that have spent their life in credit, man, it's like the penny drops right away. They're like, oh my God, this is exactly the hedge I've been looking for my whole life. Everybody can use different ways of valuing it. Other people can value it based on a technology. Other people can value it based on an information transfer protocol. So technology stock guys who I know have bought Bitcoin in Canada, they think of it as a technology, not as an insurance product. And then credit guys think of it as an insurance product. And you may think of it as totally something else. Store of value, store of wealth. All of this is what determines an open market price on Bitcoin. And that's the beauty of unmanipulated market, okay? Bitcoin is unmanipulated. The fiat Ponzi is manipulated by guys like Jerome Powell, who gets up there and tries to manipulate your cost of funds using antiquated technology and rear view mirror driving, okay? This is the problem with capitalism today. Bitcoin is a free and open market. It's a thing of beauty, and it means different things to different people, and it can get valued in a whole lot of different ways. Ultimately, it settles on a market price that is not manipulated. It's beautiful. Yeah, let's not go too far, but just imagine the idea that I laid out with the USA. Take that for the USA, add in all the G7
G20.
Nations.
Okay.
Yeah, go all the way down to the G20. You'll come up with a number that's over $700,000 US per Bitcoin. Using credit default swaps. Hey, it's trading under 30,000. It's trading at let's do the math. It's trading at 1/27th of its intrinsic value according to, I say the word intrinsic, you don't agree with me, I don't care. It's still 1/30th or 1/27th of the value that you could put on top of Bitcoin as a valuation metric. I don't sweat it. It's so stupid cheap. Don't overthink things. I could even give you a higher target price based on a share of total addressable market. I don't want to go there. I'm just going to say, if you own 0 Bitcoin, you're a fool. It is the best asymmetric investment opportunity I've ever seen in 35 years of managing risk. And we're listening to guys like Taleb and Charlie Munger, who are conflicted fiat Ponzi fools who are trying to say it has 0 intrinsic value. I'll take the other side. Thank you, sir. Because I think it could go many times higher. Thank you.
During the discussion with Kitco News, Foss also discussed the possibility of pricing oil and natural gas in Bitcoin. According to him, Bitcoin is digital energy that is bound to continue to increase in value because of its fixed supply. Compared to the US dollar, which is constantly being debased, Foss believes it's a no-brainer that countries will someday begin to accept Bitcoin in exchange for their oil and natural gas. The Canadian adds that leaders like Canada's Justin Trudeau might not have what it takes to do that, but he believes someone like Vladimir Putin does. Foss also counsels investors to have some percentage of their investment portfolio in Bitcoin. He says to put 5% of your portfolio in Bitcoin and use the rest of the 95% for whatever you like. Bet and hold for 20 years and see what happens. If Bitcoin crumbles, you only lose 5% of your portfolio. And if it doesn't, you completely missed out on an incredible investment opportunity. When asked to make a price prediction for the leading asset, Foss replies with the famous Michael Saylor quote, "It's going up forever, Laura." What are your thoughts on Greg Foss' discussion on Bitcoin and the many ways it can be valued? The popular investor hopes to see energy being priced in Bitcoin during his lifetime. Do you think that will happen anytime soon? Please drop your comments and observations in the comments section below, and don't forget to smash the like button, subscribe to the channel, and check out our other videos from some of the market's brightest minds. Thanks for watching.